Hello and thanks for joining us on this Monday evening. Top stories today. PepsiCo is reporting higher earnings than expected. More people stocked up on snacks in the second quarter during stay-at-home orders. Sales of newly built homes surged over 50% last month. It's the largest annual increase in over a decade. Global corporate debt is expected to grow up to $1 trillion this year, set to break another record after 2019's record-breaking year. And chipmaker Analog looks to buy out its rival Maxim. Could be the biggest deal of the year. U.S. stock markets closed mixed on Monday, with pharmaceutical companies BioNTech and Pfizer jumping after their experimental vaccines were fast-tracked by the FDA. But the Nasdaq and the S&P 500 were pulled down by big tech companies. The Dow inched up about 10 points or 0.04%. The S&P 500 lost almost 30 points or 0.94%, and the Nasdaq dropped 226 points or 2.13%. And PepsiCo's quarterly revenues are coming in higher than expected. Americans stocked up on snacks like Tostitos, Cheetos, and Doritos before hunkering down for the nationwide lockdowns. PepsiCo's CEO says it gained market share in salty, savory snacks. Under its Frito-Lay North America brand, sales rose 7% in the second quarter, while Quaker Oats surged 23%. But North American beverage sales fell 7% as restaurants remain closed and sporting events delayed, and the company expects its beverage sales to perform better in the second half of the year. Overall, PepsiCo reported net revenue of about $16 billion, beating analyst estimates. The company earned $1.32 per share. Analysts had expected only $1.25. Pepsi stocks jumped nearly 3% on news of the earnings. And global corporate debt is expected to grow by up to $1 trillion this year. It was already at record highs before the pandemic. Now companies are trying to strengthen their finances to stay afloat.
A new study of 900 firms estimates companies around the world will take on up to $1 trillion of new debt in 2020. That would be a new record. Asset manager Janice Henderson conducted the study. It says global corporate debt is expected to reach $9.3 trillion for the top 900 firms. That's up 12% from last year. Right now, U.S. companies account for half the world's corporate debt. Germany is in second place with 3 of the world's most indebted firms. Citigroup forecasts that European companies borrowed over $500 billion between March and May. That's almost 3 times what they borrowed during the same period last year. But a quarter of the companies don't owe any debt at all, and some have healthy cash reserves. One of those companies is Google's owner, Alphabet. It has a cash reserve of over $100 billion. According to the asset manager, companies do need access to credit in order to recover, so more debt isn't necessarily a bad thing. The main concern is whether they can keep up payments to investors. But high-profile companies like Chesapeake Energy filed for bankruptcy in recent weeks, renewing worries about debt sustainability.
And sales of newly built homes are up 50% year on year. John Burns Real Estate released results of a new survey today. It makes it the largest annual gain since the housing crash a decade ago. Record low mortgage rates are fueling home purchases, and people are starting to move to the suburbs. Homeowners also want more high-tech features in their home and more space for working from home or homeschooling. Another survey by Taylor Morrison reported an even higher increase in June, a 94% annual jump. And the Trump administration will place new tariffs on over $1 billion of French goods, but it will hold off on implementing them for now. It's part of an ongoing negotiation over France's digital services tax on American tech companies.
The Trump administration announced additional duties of 25% on French imports. It's in response to the country's digital tax on U.S. tech companies. But the U.S. Trade Representative's office said the levies would be delayed for 180 days to provide time for negotiations. The affected French imports are worth about $1.3 billion in total. They include French cosmetics and handbags, but cheese and wine were dropped from an earlier announcement. According to the U.S. Trade Chief's office, with the additional 25% of tariffs, the tax dollars the U.S. could collect would be comparable to what France would get from American tech companies, which is estimated at about $450 million in 2020. Big companies sometimes set up headquarters in low-tax European countries to dodge taxes. The French digital service tax is seeking to raise revenue from these companies. But the U.S. says the tax unfairly targets American tech giants, such as Google, Facebook, and Amazon. For now, the two trade partners are both delaying the taxes for more time to negotiate. The Organization for Economic Cooperation and Development has been trying to facilitate a compromise.
And we caught up with international trade expert Juscelino Collars to get his thoughts on the friction. Professor Collars, thanks so much for joining us.
Thank you for having me, Paul.
And Professor, who do you think holds the strongest hand in these negotiations?
Well, I would say that we are evenly matched now. The United States announced last Friday that we were going to tax, put a 25% tariff on 21 French products worth around $1.3 billion. We're deferring those taxes until January next year. So there's a 180-day wait period to see what the French do. But the French had made a deal last year where they basically said, we're going to charge you the tax. We're just going to defer them. So now we've upped the ante. So it's, it's like both guns are cocked right now, and it's now time to sit down and negotiate to see if we come to a resolution that is agreeable to both sides.
And I know President Trump, since he's come into office, he's been very active about renegotiating trade deals and agreements and stuff like this. Is this something that he would like to be involved in, do you think? Not him personally, but his administration. Do you think he can use this to his benefit?
Actually, interestingly, this is one of the few areas where it wasn't President Trump that made the first move. He is just, the Trump administration is just making the move that the French and the Europeans and few other countries have made. They've decided to target U.S. companies, digital services companies. 90% of the activity globally on what Google, Microsoft, Amazon, these companies that really have big the advertising revenues they are American companies. And now all of a sudden, these countries have decided to target digital services with a new tax. What the United States wants is just some level of, if you're going to, some level of parity. If you're going to come after our companies, you're going to have to agree that we're going to have to tax businesses in a new way in international transactions, which is something that the Europeans apparently are not ready to do. They just want to tax our companies. So in a way, this is not President Trump having the initiative to actually increase tariffs to bring parties to the negotiating table. We are bringing out the potential tariffs in order to get the French to understand that it's not only our companies they should be taxing, right? And that if they're going to tax our companies, that we should be in a position that we should also be able to tax their companies too.
That's great, Professor. We'll keep an eye on it. We'll have you back for the next update. Thank you.
Thank you so much.
And chip maker Analog Devices is close to buying out its rival Maxim Integrated Products. The deal could be worth $21 billion, the biggest of the year so far. If it goes ahead, it would boost Analog's market share in 5G chip making.
Semiconductor maker Analog is in talks to buy Maxim in a $21 billion deal. Under the terms, Maxim shareholders would receive 63% of an Analog share for each share they own. Current Analog shareholders will own about 69% of the combined company. Maxim shareholders will own the rest. The combination of the two companies would produce a $68 billion chip-making force, able to compete with Texas Instruments, the current leader in analog semiconductors. All three companies specialize in analog and embedded computing components. While Maxim won't be closing the gap between Analog and Texas Instruments entirely, it will broaden the range of products they are able to produce. The deal would combine Maxim's strength in automotive and data center markets with Analog's industrial, communications, and digital healthcare segments. Analog chips have seen a resurgence in users and customers in recent years. It is also a highly profitable part of the chip industry. The Philadelphia Stock Exchange Semiconductor Index has tripled in value since 2015. This acquisition follows a slew of other acquisitions delayed by the pandemic.
Late last week, Twitter CEO Jack Dorsey donated $3 million to a universal basic income program. UBI would mean that everybody in the country, rich or poor, would get a fixed allowance from the government. For example, Andrew Yang, the charismatic former presidential hopeful, wanted to give everybody $1,000 per month. Advocates of the program say it would help alleviate poverty, but others say it's just a hand out, not a hand up. One of those people is Damon Dunn, who's just published a new book called Punting Poverty, Breaking the Chains of Welfare. We caught up with him earlier to get his thoughts. Damon, thanks so much for coming on.
Thank you guys for having me.
Anytime. And Damon, late last week, the Twitter CEO, Jack Dorsey, he donated about $3 million to a universal basic income pilot program. Now, I know in your new book, you've spoken quite in depth about your views on universal basic income. Just wanted to get your thoughts on Dorsey's latest move.
There's good debt and there's bad debt. Debt that you pay for an appreciating asset, that's good debt. If you buy a house, the house appreciates over time, that's good debt. If you spend, let's call it $25,000 to go to college, and you leave college and you get a $50,000 a year job, that's good debt because you have a job and you're making 50% more on that money every single year. And so when Jack is saying that we ought to give up $1 trillion or $2 trillion for universal basic income, what is the return? Nothing. We get consumption, right? It's not an appreciating asset. We're not getting a return on that investment. So it's bad debt. We increased the debt by 10%. We're about $20 trillion total U.S. debt that the public holds. And we get nothing in return for it. So it's obviously a bad decision to invest money in unhealthy debt.
And from an economic standpoint, Damon, it's a perfectly logical explanation. But how do you explain this to the people who are suffering in America right now?
There are people who are going through situations like I grew up. My mom had me at 16. My father was killed when I was 3. I lived in a trailer with 10 people. We ate mayonnaise sandwiches 3-4 days a week. And what I would tell them is that your path to a successful future is a skill set. Right? Whether it's a vocation or some type of license, whether you're a radiology technician or whether you are a carpenter or you are a plumber or whether you go to a 4-year college and you get a degree and you get a skill set there. What allowed me to move out of poverty was actually getting a job. And what we should ask of Mr. Dorsey is for him to mobilize those dollars towards training, towards creating vocations in high schools or giving students opportunities to go to community college and get access to those programs. But just giving a man fish, you just feed him for a day with universal basic income. But if you give him a skill set and you teach him how to fish, you feed him for a lifetime.
And what are some of the best, say, programs or methods or things like this you've seen for this exact purpose?
So most of our community colleges have 30+ vocations or licensures where you could actually get a vocation and leave there and have a career. And those range, like I said, from certified nursing aides from the medical side. You can be carpenters and plumbers, so all the construction trades. You've got stuff on the soft side of the medical practices where it's like radiology technicians. So tons of trades and vocations, things that we had in our high schools back in the 70s and the 80s, where students who were not college bound got an opportunity to get a career and not just have to go work minimum wage job and just have work and not be able to move out of poverty and not have socioeconomic mobility. So going to college obviously would also give someone that type of skill set. So we need a K-14 high school program where community college is integrated into our high school so that students graduate with a minimum of an associate's degree or with a minimum of a vocation or some type of trade. And with $2 trillion, we could pay for that program. We could pay for that program for $6 billion. We have about 3.6 million seniors that would graduate per year out of high school. And $6 billion a year was all it would cost to be able to send all of those students to a community college during their senior year in high school or during their four-year high school career to be able to finish with one of those vocations or degrees.
And for you personally, coming from, as you said, a life of poverty to where you are right now, what was the most beneficial thing for you, would you say, looking back?
Definitely get an education. Education is my way up and my way out. You know, look at every recession. The last people that are fired are people that have a college degree. The first people that are rehired after the recession are people that have a college degree. People look at home ownership. People who have college degrees and the amount of home ownership versus people who don't have college degrees. At the end of the day, getting a skill set, being able to go to college and either being able to get a vocational trade is what will differentiate your opportunity to have socioeconomic mobility. And that's it, nothing else. If you took all of our economic policies and you put them in any country in the continent of Africa, they wouldn't have the same GDP. Why? Because they don't have the same skilled labor base. If you go to Mexico and try to build a custom home, you're not going to get it done in the same time frame here in California because they don't have the same skilled workforce. So ultimately, we need skilled labor, and skilled labor is what allows you to move out of poverty, to own a home, to be able to retire, to be able to leave an inheritance for your children.
Really appreciate your insights, Damon, and hope we have you back on again soon. Thank you so much.
Hey, thank you, guys.
And still to come, oil prices eased ahead of the upcoming OPEC meeting. They're expected to discuss increasing oil production as demand rises with the lifting of lockdowns. And Tesla cuts thousands of dollars off its new electric SUV. Find out the new price after the break.
Hello there. Doesn't it feel like we're moving further away from the very values that our republic was built upon? And the media in our country has just been adding fuel to the flame, which is why you need to try the Epic Times. It's pure, honest journalism that's restoring traditional values, and it reports the news with no spin, no hidden agendas, and no false narratives. So if you want to know the truth about the FISA abuse that took place during the 2016 election, or how socialist and communist ideologies have been infiltrating our society, or how the Chinese Communist Party's cover-up led to this global outbreak, and so much more, then you need to check out the Epic Times. And for a limited time, you can try the paper yourself for a full month for just $1, and we'll send you a very special free gift. A giant timeline that's 3 feet by 4 feet, documenting the FBI's abuse of FISA spy warrants. So go to readepic.com and claim yours today.
Oil prices are down today as producers are expected to discuss increasing production at the upcoming OPEC meeting. Demand for oil is up again as lockdowns are lifted.
Oil prices dipped on Monday as traders weighed COVID-19 cases and an upcoming meeting of representatives of the Organization of the Petroleum Exporting Countries, or OPEC. Key OPEC delegates are expected to push for earlier crude production cuts to be lifted at a midweek meeting. Both Brent and U.S. crude were down by around 0.5% in morning trade. By 9:30 Eastern Daylight Time, Brent had fallen 22 cents to just over $43 a barrel, while U.S. crude was down 21 cents at a little over $40 a barrel. Sunday saw a record rise in new daily COVID-19 infections globally, with over 230,000 reported in a single day. Meanwhile, oil traders have been eyeing a technical meeting of OPEC representatives on Tuesday and Wednesday. OPEC officials cited by the Wall Street Journal said a group of oil producers led by Saudi Arabia would push for an increase in crude production starting in August. The Saudi-driven proposal is said to amount to an increase in daily production by 2 million barrels, up to 7.7 billion barrels per day. Earlier, in response to plummeting demand for oil due to the pandemic, OPEC and its allies cut output by a record 9.7 million barrels per day for May, June, and July. OPEC Secretary General Mohammed Barkindo said Monday that the easing of pandemic-driven lockdowns has led to a gradual rise in oil demand, bringing the oil market closer to balance.
Tesla recently cut the price of its Model Y SUV. The move comes months after Tesla cut the prices for its Models 3, X, and S. And with the price reduction, Tesla may need to produce a lot more Model Ys to meet the demand.
Just 4 months after Tesla unveiled its Model Y sport utility vehicle, the electric car maker announced it would slash the price of its newest product. The $3,000 price cut comes as Tesla seeks to maintain sales momentum in the COVID-19 pandemic. The reduction follows discounts Tesla offered in May on its Model 3, Model X, and Model S. The company, headed by Elon Musk, this month posted a smaller than expected drop in its second quarter deliveries, proving resilient despite the pandemic that hit the global auto industry. The Model Y now starts at just under $50,000, down nearly 6% from its previous price of just under $53,000. According to the carmaker's website.
And Google announced it will invest $10 billion in India over the next 5 to 7 years. It's Google's biggest commitment to the key growth market yet. Google's CEO said this is a reflection of the company's confidence in the country's future. India currently has 500 million active users on the internet, and Google wants to help get another 500 million online. The company will also focus on other areas. It'll spend $1 million to support digital education. The money will enable 1 million teachers in 22,000 schools across India to use Google's services to support online learning. And still to come, one iPhone maker is planning to increase production of their products in India as part of Apple's quiet production shift away from China. And China's banking regulator warns of an increase in bad loans. That and more after the break.
Hello there. Doesn't it feel like we're moving further away from the very values that our republic was built upon? And the media in our country has just been adding fuel to the flame, which is why you need to try the Epoch Times. It's pure, honest journalism that's restoring traditional values, and it reports the news with no spin, no hidden agendas, and no false narratives. So if you want to know the truth about the FISA abuse that took place during the 2016 election, or how socialist and communist ideologies have been infiltrating our society, or how the Chinese Communist Party's cover-up led to this global outbreak, and so much more, then you need to check out the Epoch Times. And for a limited time, you can try the paper yourself for a full month for just $1, and we'll send you a very special free gift. A giant timeline that's 3 feet by 4 feet, documenting the FBI's abuse of FISA spy warrants. So go to readepoch.com and claim yours today.
When you look at TV networks in America, a soundbite and fight-it-out culture prevails on news and commentary programs. As a Canadian, I'm fascinated with America, and I wanted to offer American thought leaders an opportunity to share their thoughts in a deep dive format where we can explore their ideas together. And so American Thought Leaders was born. The world's most brilliant thinkers believed that open discourse was the key to greatness. However, all around the world, we see that discourse is being stifled and political agendas have subverted media. the Epoch Times launched its Global Thought Leaders program to bring back this great tradition of free thought. As the host of American Thought Leaders, every week I interview some of the most intriguing minds on the most pressing issues of our time. Be sure to check out our new episodes every week.
A top White House advisor says he thinks the president will take strong action against Chinese-owned social media apps like TikTok and WeChat. He says the apps are taking part in information warfare against the United States and they could be banned.
White House advisor Peter Navarro says he expects President Trump to take strong action against TikTok and WeChat, two Chinese-owned social media apps. He told Fox Business that all user data from the apps goes straight to servers in China and to the Chinese regime. Navarro said those apps can be used to steal personal and financial information for blackmail and extortion. They can be used to steal business intellectual property and proprietary secrets. Last week, President Trump said his administration is considering banning TikTok in the U.S. TikTok is owned by Chinese company ByteDance. It's popular with American teenagers. WeChat is owned by Chinese tech giant Tencent Holdings. It's the top messaging app in China, and Chinese people around the world use it. Many U.S. officials are concerned about TikTok, and now corporate America is looking into it. Wells Fargo told employees to remove TikTok from work phones because of security concerns. The company has denied allegations that it's a national security threat to the U.S. TikTok hired former Disney executive Kevin Mayer as its new CEO. But Navarro said it's the same thing that Huawei did, and putting an American puppet in charge isn't going to work.
And more signs of a production shift away from China. Apple supplier Foxconn is going to expand one of its factories in India. The factory currently makes the iPhone XR and will soon produce more iPhone models that are currently made in China.
Apple supplier Foxconn will invest up to $1 billion to expand a factory in India. The factory is where Taiwan-based Foxconn assembles iPhones for Apple. The move is part of Apple's quiet and gradual production shift away from China. One source told Reuters Apple asked its clients to move part of the iPhone production out of China. Foxconn's planned investment in the plant, where Apple's iPhone XR is made, will take place over the next 3 years. Some of Apple's other iPhone models that are made in China will also be made at the Indian plant. The expansion will add about 6,000 jobs. India is the world's second biggest smartphone market, but Apple only accounts for about 1% of smartphone sales in India, where the pricey iPhone is seen as a status symbol. Building more phones in the country can help Apple save on import taxes, keeping prices lower. Last month, Foxconn's chairman said it would ramp up investment in India.
The amount of bad loans in China will increase in the near future, as according to the country's banking regulator. It says the stage is already set, it's just that virus relief incentives have delayed the bad loans showing up in the bank's balance sheets.
China's banking regulator is telling lenders to prepare for a jump in the number of non-performing loans. It's advising them to preserve capital by limiting dividend payments and capping bonuses. What makes things worse is it says small and medium-sized banks are facing deteriorating asset quality. They're invested heavily in the housing and stock markets, violating regulations. This will make it harder for the banks to remain solvent should we start seeing defaults. According to official figures, the country's GDP shrank by almost 7% in the first quarter, but banking profits grew by 6%. The regulator defended the disconnect by saying it's just a lag in the banks feeling the effect of the pandemic.
And that's the latest business updates for this evening. Thank you so much for tuning in. We'll see you tomorrow.